Everyone, it's Norm Farrar, aka the Beard Guy here, and welcome to another Lunch with Norm, the Amazon FBA and e-commerce podcast.
Lunch with Norm.
Okay, I see we've already got people starting to join us. Welcome. Today's episode is going to be really great. We're going to be talking about how to grow faster with financial KPIs in accounting. So, sound interesting? Oh, I guarantee you it's going to be interesting. So many Amazon sellers miss out on this and they just leave dollars on the table or they just mess up. So today, our guest is the founder of Insight Matters. He helps online business owners achieve their goals based on financial insights. No matter if you have a hobby business or you are aiming to the stars, you gotta listen to this podcast today. It's going to be really interesting. Our guest is his first time on our podcast, and it's Rob Te Braake. So anyways, I'm looking forward to get starting. But before we get started, we have a quick word from our sponsor. Thank you, Z.co, for sponsoring this episode of Lunch with Norm. Are you looking to take your e-commerce business from local to global? You can with the help of Z and their brand new app. That's right. You can track live shipments with push notifications, get detailed lead times for each stage of your shipment, and store all compliance and VAT reclaim documents in the palm of your hand, all while listening to Lunch with Norm. Ready to expand your e-com empire and take your Amazon FBA business global? Use the link in the description to learn more about Z's new app that's now available on desktop and mobile. That's Z.co, ZEE.co. All right. See, Kelsey was saying that I was screwing up too much. So anyways, I hope you like those new spots that we're doing. That way, I don't mess up. So anyways, Squire, where are you?
Hello, everyone. Welcome. We did get some intrigue. Jessica Rabbit is asking how the stash is doing today for Movember. Here it is. It's day 17, and it is it's not going as planned, but we're gonna get there.
You know what, Kels? Like I was watching this show last night, How to Catch a Serial Killer or something like that. And the show is about a 1970s serial killer. And every cop on that TV show had that mustache.
I don't know what to take from that.
Well, I was just wondering if you were a 1970s cop or something. Maybe that's what you go out now for Halloween. Halloween 1970s cop.
You know what? I'll write it down. I'm going to jot that down. And we'll see. But welcome everyone to the show. Welcome Rad, Manny, Jeff. We've got Roz, Simon, all around the world. Thanks for tuning in. If you haven't yet, please smash those like buttons. Share this episode out to your friends or any Facebook groups that you think might learn something new. Also, if you're watching this on a replay, skip ahead, skip right to the interview, and jump right in with the interview with Rob. No need to watch us bicker back and forth here. But also, if you're watching from YouTube, we'd really appreciate if you click that subscribe button, that big red button below. And yeah, we've got a lot of new things happening, like these ads that we just edited and made really nice. So it's going to be good. I got lots planned, and yeah, we can jump into today's episode.
I just shaking my head. Oh, Simon. That's all I can say. All right, guys, if you have any questions, throw them over into the comment section. Sit back, relax, grab your cup of coffee, enjoy the episode, and welcome Rob.
Good afternoon. Thanks for having me.
Hey, it's our pleasure. Rob, for those of us who don't know, you want to just talk, just introduce yourself a bit more and just what do you do?
My pleasure. So I'm Rob. As you can probably tell from the name and the accent, I am Dutch, but I've been living out of the Netherlands for the past 12 years. I have a background in finance, and since 4 years, I run Inside Matters. And basically what we do, and that's where my personal background and my personal passion comes together, is we combine finance with strategy. So my biggest frustration when I started as a consultant was that everybody sees finance as the thing that is done once a year for the taxes, and B, it is the thing that most entrepreneurs forget and ignore. So anytime I would start working with somebody as a finance consultant, the first question I would ask is, show me the reports, show me your books, what are we working with? And it turns out pretty much nobody has their stuff in order. So I kind of set up Inside Matters to scratch my own itch, to make sure that initially as a consultant, we got to work with the right information, and it kind of got out of hand as it usually does.
You know, you bring up a really great point. So, you know, you might be doing insurance, you might be a teacher, you might be doing something completely different. Rosalind, you're a lawyer, and all of a sudden Amazon, you know, comes your way, and now you have to figure out bookkeeping, or now you have to figure out financial. Are you the typical? I hate this. Oh, I've sold $10 million on Amazon, top line revenue.
Yeah.
What did you make? Like, what's your profit? And that's what I think is so important. And that's why I really think that this is going to be a great episode. So let's start right there. Like, you know, why is it so important that Amazon sellers understand their KPIs, their financial KPIs?
Because exactly what you just said, people look at revenue because that's the vanity metric that is nice to tell the neighbors. It's nice to brag how big you are. But in the end, if you have to pay your suppliers, you want to pay your team, and most importantly, you want to pay yourself, revenue doesn't help you anything. It is about not only profit. Profit is already more important, but it's about cash flow. Making sure you have the money in the bank, that you can pay everybody that you owe money, and have a chunk of money set aside to pay yourself. And it is a little bit, I make the analogy with driving a car a lot. You can get into a car and you can drive a long distance. But if you don't know where you're going, if you don't track your progress towards your destination, who knows where you're going to end up? You may have had a nice drive, but you may get stuck without fuel in the middle of the desert. So you need to track, where are you going, what metrics are indicators on how you're progressing, and how are you faring along those metrics? Are you making progress on the right parts?
I'm going to even back that up even further. So if you're getting, and you might start off as a hobbyist and you're just trying to, you know, do a side hustle and make a couple extra bucks. But once you find out that maybe it's your first or your second product and you're going, wow, I can do it. I want to create a brand. I want to run this like a business. One of that roadmap in my, like, the first thing that I'll do is I'll try to go to LivePlan, or I'll go to some sort of tool that can allow me to figure out, it walks you right through the stages of putting together a business plan, or at least an executive summary with the financials, so you understand whether you're making it or not. You know, what are your chances? What are your complete landed costs? And let's go through some of that right now. So first of all, the point I was making is that roadmap for me starts with a business plan. If you're serious, if it's a hobby thing, then that's fine. Just, you know, do the side hustle and make a few extra bucks.
Agree. I frame it slightly different. For me, it is important to start with a goal. Like, what are you trying to achieve? And that should translate into a strategy and a business plan, and that translates into a financial plan as well.
Very good. Yep. No, I agree with that. So let's talk about some of the different KPIs we should be looking at.
Oh, yes. Can I jump on my hobby horse immediately?
Yeah, you can.
Because operational cash flow. If there is one thing I would love to preach to every e-commerce entrepreneur, it's operational cash flow. Everybody knows revenue. Almost everybody knows and understands profit. But operational cash flow, that is the one that drives home the profit. That's the one that drives home your success, if you're successful or not.
Right.
So basically, for those who don't know, operational cash flow is the difference between every dollar that you receive in the bank account from your clients minus every dollar that goes out in all your normal business expenses, whether that's your rent, your purchasing, your shipping costs, your Amazon fees, anything. And that one is so important because at the end of the day, that one is the one that tells you, are you running a sustainable business or not? And case in point is, you can have a really good month in sales. You can have a lot of profit, but if you have to pay your supplier the next purchase amount, you're running out of cash that month. So cool that you made a profit, but your bank account is empty. So that is why operational cash flow is the one that matters more than anything.
It's interesting that you brought that up, and I completely agree. That's something that's usually off the table when you're talking to a bookkeeper who's running a report. They'll give you a profit and loss statement, and you never see the cash flow statement. Yeah. We were doing something just yesterday. I was on the phone, like we have staff meetings with different companies throughout Monday, Tuesday. And one of them, we noticed that 3-month forecast that we were going to be in a loss that month. So what did that tell us? Okay, we could prepare in advance. Let's put together a marketing strategy so we could drive traffic over. Or how can we, instead of having a 30-day term on this, let's make it a 15, or let's make it due upon receipt. And when we looked at it again, cash flow was solved. We're not going to be losing money that month. We're going to be in a positive. It's so easy. Yeah.
You say it's easy, but in reality, it turns out that apparently it's very hard because people don't do it. And the beauty of the misery with e-commerce is you have a cash flow problem if you go too fast, too slow. So your costs are too high, your revenue too low. But you can also have a problem if you grow too fast. Just yesterday, I had a call with one of our clients in the supplements industry, and they have loaded up so much inventory for Q4 that they're on the edge of breaking at the moment because they need to pay the last parts to their suppliers in the next few weeks, but sales will only start hitting their bank account in December. So they're on the edge of bankruptcy because they were too enthusiastic in their sales forecasts and in their marketing plans.
So how do you see that you're going into a loss? You see, and I 100% agree with this. I've seen it. I've experienced it. I've bought a brand because they grew so fast that they couldn't afford the inventory to keep going. What are your options? What can you do to help fill in the blanks when you do see that you're going to have a cash flow problem with your let's talk inventory, because that's usually the one that'll kill you.
In e-commerce, that's 9 out of 10 times the cause. Probably the most obvious one is get financing, whether that is debt financing or equity financing. But I would say that's option 2. Option 1 is renegotiate payment terms with your suppliers. Most e-commerce entrepreneurs that I work with focus on purchase price. So when you talk with the supplier, it's about how much lower can we get the price. But how about you don't push them on the price or push them less, but instead push them on better payment terms. So instead of paying 30 at order, 70 before shipment, you pay 30 at order, 70, 60 days after shipment. If you have a trusted relationship with the supplier, that should be a realistic option on the table. And in most cases, that solves your cash flow problem. So the cheapest source of funding is actually your supplier. If that doesn't work, the second best option is getting debt financing in. Whether that is a traditional bank loan or whether that is maximizing your credit cards, which is always a bit tricky. Option 3 is basically Shopify loans, Amazon loans, these kind of payment processor loans, which are relatively expensive, but they get the job done. And the last one on the list is equity financing. You don't want to sell a part of your business just to finance your inventory. That's the last thing you want to do.
Yeah, agreed. And those are some great options. And I like to add this, but I wouldn't say it's like up there. This might be the last one. Friends and family. It's tough. If something goes wrong, and it does go wrong. Like things can absolutely go wrong, but friends and family would be probably the last on my list. But if you want, reach out, see, but make sure. This is where, you know what? I find that friends and family have selective hearing. So you can go to them and say, here's the risk. There is risk here. You need risk tolerance. This is what this is what I can do. I cannot guarantee. All of a sudden that there's kind of they don't hear it's like the Charlie Brown teacher, right? They don't hear the not guaranteed part. And then when something does happen, it's horrible to get through.
It's an absolute disaster to dissolve that without going into personal bankruptcy, basically, while maintaining family relationships. It's hard.
Yeah. Try going to a Thanksgiving dinner when that happens. But so
the only advice I can give there is put things really clearly on paper so that the selective hearing becomes less relevant. If it's in writing, I wouldn't say Thanksgiving will be nice, but it should be more tolerable.
But you know what? When you say that, put it in writing. One of the things that I've done, this is more for any contract that I put, if there's a specific guarantee or something that I have to bring to the person's attention, not only will I have them sign the bottom of the page, I'll have them sign the line that says whatever it is, whether it's good, bad, or ugly. And so there's no question that they read that specific line, and especially if it's a longer contract. One of the other things for cash flow that I found, and I don't know if you explore this as well, but smaller, if you're ordering product twice a year, can you coordinate it where you can order it every 45 days? And then that will loosen up your cash flow as well, especially if you have these better terms. And you'll see a huge increase or a dramatic increase in your cash flow if you're moving some significant product.
True, but that will depend on two things. One is, will the supplier cooperate with that? And usually if you guarantee the quantity for the whole year, that should be okay. The second one is shipping cost. If you're buying domestically in the US and you're selling domestically, that should be fine. If you're shipping from China or from anywhere else across the world to the US, and you're all of a sudden, instead of having 2 containers full, you have 10 LCLs, then the shipping costs will rise so much that it may offset the benefit in payment terms.
Right. Especially nowadays with the price of shipping. Yeah, that would come and play much more into the game. All right. So I just wanted to ask any of the listeners if they've had any horrible experiences with bookkeeping or, with their financial planning. What's something that might have come up and you had no idea about that caused a problem with your business? And let's talk about that now. So how does financial reporting and financial KPIs help online businesses make better decisions and grow faster or more profitable?
That comes back to what we said earlier about having your goal in sight. If you know what you're trying to optimize for, you can break down everything in your business to work towards that goal. So if you are looking to build the next Amazon, basically, or some massive 9-figure e-commerce business, you're going to be looking at different things and measuring success on different metrics than if you're building it as a lifestyle business, as a side hustle or whatever. So understanding what you're trying to build helps you translate into how you define success, and therefore you can measure it better and you can identify earlier if you're going off the right path.
Okay.
So
I almost forgot, we're halfway through the show, but we do have a really great giveaway and bonus today. So Rob, why don't you talk about the giveaway that you're offering?
Yeah, so one of the things we offer is a game plan. And the game plan is exactly what I was just trying to explain, from setting your goal, translate that into the metrics, and making sure your bookkeeping is set up so that you can actually measure the right things easily. That whole game plan is what we usually offer as a standalone product. And the giveaway would be a 25% discount only for the audience here.
Okay, great. So that's going to be put under our bonus section. And then you're also offering something very unique that you don't normally do for one winner of Wheel of Kelsey, and that's going to be the private one-on-one consult. Is that correct?
Exactly.
Right.
Correct.
So if you'd like to enter into Wheel of Kelsey for this personalized consult, just hashtag Wheel of Kelsey. If you want to enter twice, tag 2 people and hopefully get them to comment. All right. Now, let me see. I think, Kelsey, tell me if I'm wrong, but we do have another quick word from a sponsor, correct? I wanted to give a quick shout out and say thank you to Global Wired Advisors for sponsoring this episode of Lunch with Norm. Global Wired Advisors is a leading digital investment bank focused on optimizing the business sales process. For more information, please call Chris Schifferling and his team over at globalwiredadvisors.com. Man, that works so well when I don't mess them up. Okay. All right. So let's move on to setting goals, setting your personal goals. What are you looking for, or how do you set these KPIs that matter to your ecom business, that meet your goals?
The place to start is really, what is your personal goal? In the end, the business, weird as it may sound for some, should serve your personal goal. So again, do you want to build a 9-figure business? Is that an ego thing? Is that a financial thing? Do you want to make it a lifestyle business and live in Thailand on the beach? Whatever it is, but be very clear and transparent about your personal goal, because that, for you as the owner, decides exactly what the business goal should be. Because in the end, the business goal is a financial number, whether that is your personal income, whether that is an exit value, whether that is a revenue number, but there is a financial number that defines and that matches up with your personal goal. So that translation is key. And one of the things we see go wrong often is where people have a personal expectation, but have a very different goal for their business. And that eventually starts to create friction and cause issues, where people start making decisions that are wrong or feel wrong for them personally, or feel right for them personally, but are wrong for the business.
I'm looking at setting up those goals, and you say, they could be wrong for the business. How can you measure this? So, especially I've seen this, I've done it a million times, where I've jumped onto a brand, I'm starting to market it. Something has come up that I've made mistakes, but how can you ensure, or how can you nip those problems in the butt right off the bat? Is it just regular monitoring? Is it forecasting? What would you recommend?
Sorry, my earbud all of a sudden dies on me. How to nip those in the butt?
Yeah, how to mitigate the damages? Let's put it that way.
Line up. Yeah. Assuming that they line up, then the one thing you want to do is make sure that you indeed track the progress. So again, if your goal is a personal lifestyle income, so you want to pull out $100,000 or $200,000 a year for your personal lifestyle, in that case, if profitability is lagging, because in that case, profitability and cash flow are key. If profitability is lagging, you see that very, very easily. So that's where you need to jump in. If your ambition is to create a super big business, then at that point, revenue growth goes over everything. So if revenue growth is lagging, you see that there's a discrepancy. And if your revenue goes over everything, then you don't have to worry so much about profitability as long as your funding allows it. So it decides on which metrics to pay more attention to. And therefore you can nip them in the bud easily if they go off track.
Okay. And what about setting these up now? So you've got your goals, but can you give some examples of goals? Hello, can you hear me?
I apologize.
No problem.
Yeah, there we are. Yes.
Okay, can you give us just some examples of goals that people can use in their business, in their online business?
The most common ones we see are either build to sell, so build something and sell for an X amount of dollars 3 or 5 years out. In some cases faster, but that's a very common one. Lifestyle income is a very common one. So I personally want to have an income of $150,000 per year, and I want to work 4 hours a week. And I want the business to be run independently of me. So I want to be as passive as possible. And the other one is I want to build a brand that is household level, that is super famous, that is as big as possible. And that basically always means maximizing revenue and maximizing size. And that's more often than not an ego thing on, I want to build something that's big and important and famous.
Okay. And let's talk about some action steps. So we want to get going. We've never done this before. Where do I start? What are those steps to get us into understanding this better?
If you know your goal, the first step is indeed identifying what are the most important metrics. So if it's maximum growth, revenue growth is everything. If it's a lifestyle business, operational cash flow is the most important one to keep an eye on, because that's how you're going to pay your income. And in all cases, overall profitability matters, but it depends a little bit on the goal, how important. How you then get started is make sure that somebody, and that's definitely not you as the owner, but somebody does the books that gives you every month your P&L, your balance sheet, and your cash flow statement. And most accountants won't give you the latter, but that's in my eyes the most important one. Make sure you get those three and have your accountant or your bookkeeper break down the key metrics that you want to track. So that's probably revenue growth, that's probably AOV, that is gross margin, that is net margin, that is your ACOS, your advertising cost of sales. These metrics, get them on a separate sheet or a separate page, but have your accountant give them to you. That's the first 80-20 of it.
Yeah, we work with, and it's funny, the listeners probably have heard me or heard Lil Roberts come on here, and we have a bit of a different opinion here. I try to be super organized when it comes to classifying things. If you take a look at our expenses or our income, everything is broken down to, okay, if there's soap revenue, if there's body wash revenue, if there's this revenue, affiliate revenue, whatever it is, it's all laid out. They hate it. There's just too many, but I love it. I want to see the information per class. And the other thing that we do is anything, any expense whatsoever is tracked, invoice, upload, and we put it not only in, we use QuickBooks for most of the brands, but QuickBooks, or we put it into Google Drive. And this is so at the end of the year, not only can the accountant see it, but if anybody wants to buy the business, it's super organized.
On the first one that you mentioned, on how detailed the breakdown is, I personally love that. And if you want to take it to level 2, I fully am on board with going very detailed on at least breaking down the revenue and cost of sales per product category or per product. You could even, and for some clients we do that, make a whole P&L per brand or per product. So you really allocate even the marketing expenses and the freight costs to all of the different brands. But that's really level 2. You need a certain size and a certain level of sophistication and complexity to make that worthwhile. Second, if you're talking about exit, if you're thinking about an exit, this is even more important. Again, last week I've done a due diligence for one of our clients on a brand that they're about to buy, or actually were about to buy, a drop shipping business. Books were a mess. And if I can't trust the books, if we can't see what the revenue actually is, we can't see what costs they've made and why and where, everything the seller tells me, I question. So in the best case, we will renegotiate the price. In the worst case, and that's what happened in this case, we walk away from the deal. So with an exit in mind, this is even more important.
Yeah, I made that big mistake earlier on. I think I was in my 20s or early 30s when this happened. And you think you've sold a business because you get the letter of intent. It's done. I'm going to make X. And then that nasty phrase due diligence comes in. I had no idea what to expect. And I wasn't that organized at that point. And now it's so important. If you make it easy for the person, and I say this all the time, I back up things with SOPs as well. So if some company comes to you with apples to apples, you're organized, the other person sucks, and you have to question. And especially, you don't know the brand that you're going to be buying. And as you going in and taking a look at the books, if something is questionable, then what else are they not disclosing? Or what else can I find? And it throws up a bunch of red flags. So these types of things, they're so easy to do from the beginning. And even if you don't have it now, wait till your year end and then start implementing it. It's at least some point where you can move ahead and start doing things. And that's the same thing with forecasting. Forecasting and budgeting properly, make sure that you're hitting those numbers. It's so important. And you can, being an entrepreneur, you guys can change on a dime. You're not a huge corporation. You can change on a dime to make things fit into your budget or to make changes that are going to make sense to your business. And that might mean cutting 2 or 3 or 20% of your product line because it doesn't make sense. So those are the other things that, to take into consideration.
But how do you know if it makes sense or not? And that is if you have the numbers, if you have the data in front of you. If you don't know your gross margin and your shipping cost per product group, there's no way to know if it's actually profitable or not. So you need that data. And indeed, if you make a budget, it's given the size you're at, it's probably fine to revise it after 3 months. The corporate can't do that and shouldn't do that, but an entrepreneur, we can.
Yeah. And that's the beauty of what we do. Kelsey, I'm wondering, do we have questions? And please, if you do have questions, if you're not sure of something, throw them in the comments section. Rob's here to answer these questions. And there's no bad questions, put it that way.
Yeah, so we have a couple questions. We have a lot of comments too,
Yeah,
which
Simon.
I think is
I've
interesting.
been seeing the Simon comments.
Simon and Rosalind, but I think they've
Yeah.
made some really good points about just like some horror stories and stuff, so we can jump into those comments too as well. But a question from Rosalind: what's the most important metric or factor to determine balance risk to expand? How often do you review your plan or financial data? And what do most people overlook? Family never hears or reads it.
Yeah. How often to review financials? Monthly for your company-wide P&L. It's probably the more tactical sales data, like daily sales, daily conversions. Those you want to look at a daily or weekly basis, but that's almost more on the marketing side. Actual financial reports, monthly at least. What most people overlook is cash flow, and especially cash flow planning. So it's and this is a typical problem that most people get in January. Q4 was successful, bank account is full, warehouse is empty, and people go on a hiring spree, and they're going to spend more on ads and product development. And then along the year, they need to buy new inventory, but that whole cash buffer that they had built up in Q4 has been spent on things that actually were not that important. So especially if you're dependent on Q4, in the beginning of the year, make a plan. What are you going to do? What are you going to do in 2022? What do you plan to sell? When do you plan to sell that? And what does that mean for your purchasing schedule? Make sure you have the cash flow at hand to pay your suppliers, that you're never going to run into the situation that you're running out of inventory, because that is an insanely costly mistake, both directly in missed revenue and indirectly in brand damage. And determine balance and risk to expand. That really depends on how stable your sales are. If you have very predictable non-seasonal sales, you can take more risk because you have a very solid baseline. If it's more fashion related or more season related and there's more insecurity, you want to be way more conservative in the plans that you're making and the investments that you're doing in inventory and new products, etc.
Okay, so this is a comment that I think was pretty interesting, but from Simon: COVID, Brexit, Amazon limits, ever-sized shipping costs, energy costs, and more externals have hit everyone hard. This means managing cash flow is more important than ever before. I don't know if there's anything you guys want to touch on that from this comment.
If anything, it shows that you need to be resilient, and that means not being too close to the edge, having either a cash buffer at hand or a plan B at hand on if shit hits the fan, where are you going to get cash from to survive?
For me, for the most part, what's stated here is everybody's going through that. So, if you're on .com or wherever you're selling, except for Brexit, everybody's going to be having those increases unless there's already inventory in the system and you might be able to play with that. So I've seen a lot of people panic over increased shipping costs or, whatever it is. And, you just have to apply it unless you want to take a hit on the profit side. But everybody's going to be going up. And I think you're seeing that right now. I've been seeing a lot, like on the news, you're starting to see the inflation. Look at Walmart. It just took a major hit yesterday, I think, because I believe the reason was they were holding strong. They weren't trying to increase their prices, but they're going to increase their prices. Everybody's increasing their prices. But anyways, I don't panic when these sort of things happen. I just kind of go with everybody else. It's just part of the game. But you're right, Simon. I mean, there's always something coming at you.
One thing to add here, when there's panic in the street, when everybody's facing with this external circumstance, it's also the best moment to take a strategic action. And buy a competitor, launch a new product, or raise your prices, or maybe even cut your prices, depending on your situation.
That's an excellent point. Yeah, like just finding your competition. They're bailing. Some people are bailing. They don't want the hassle. You're right. It's a great time to buy up your competitors.
Okay, and we had just a comment about due diligence. Actually, we'll just do this question from Howard. Sure. Can you comment on scenario budgeting forecasting? It seems like it is best to have a realistic forecast and a worst case forecast for financial planning purposes.
Yes, and a best case scenario. Because as I touched on earlier, in e-commerce, best case can still kill you because of your cash flow cycle. It's interesting that you touch on this, because this is scenario planning, as you describe, is slightly more advanced than most e-commerce entrepreneur would want to get into. But if you are savvy with the numbers, yes, base case, best case, worst case. And don't be surprised if the best case at the end of the year looks amazing, but may kill you in the middle of the year.
Okay.
Okay, and then the due diligence comment that I wanted to get to is from Rosalind. Hire the CPA who does due diligence investigations. They'll automatically set up your books and reporting because that's what they want to see. Easy for us, hard for them, except the good ones do it.
Yep. Great. And also just a comment on Simon. That's too bad, Simon, that you had to buy your Lamborghini, in February, and then, or you bought it in February and then had to sell it in February. I bought my 1942 Austin Mini, and I had to sell it for a tricycle. So I feel for you though, Simon.
Ouch.
Yeah, it hurt.
All right, so that's it for the questions so far.
Okay.
But I can let you know if there's anything that comes up.
All right. So, if the listeners have anything, we've got some really great, sophisticated listeners on the call. And, what do you do? Do you have any comments that you can do to, help you out when you're putting together your financial planning? Love to hear from you. And I'm going to say it again. If you want to get a personal consult with Rob, #Wheel of Kelsey, tag 2 people, and you'll have a second entry. What's this, Jessica? So many sad car stories today. I know, it's so sad. And if there's no comments, we can just head over to the Wheel of Kelsey. Kels?
All right, here we go. The Wheel of Kelsey. All right, enjoy.
It's time for the Wheel of Kelsey.
All right, thank you everyone who entered today's Wheel of Kelsey. I'm going to shuffle up these names.
Oh, there's a couple more coming in there. Kelsey, if you want to add them, Rad's in, another Facebook user.
All right. Okay. Let me see.
We don't want you missing out, so we'll get you. We got you covered.
Right. We've got Rad. And let me see. Facebook user is Nicholas S.
All right.
Okay, just give me 1 second.
Abu, it's nice seeing you. Abu, it's nice seeing you on the call. Haven't seen you since London.
All right. Okay. So I'm going to quickly shuffle these up. 3, 2, 1.
Lucky winner.
It's Tony again.
What is it with Tony? You weighted the wheel somehow.
I don't know.
Him and Rad. Well, Tony, you win another one, and it's another really great prize. Rob just doesn't go and do personal consults. So you know how to do this. You've won 1 million of these. Again, I think he's paying off Kelsey. I
Yeah.
really do. How much is
$20 is going far.
Tony's giving you? Yeah, that's what I thought. But anyways, congrats, Tony. And the other really great thing to take advantage of, if you want to, it'll be in our resources page. We don't take an affiliate. We'd rather give you the discount. So Rob's course, or take a look at the information that he has, and check it out. You get I think it's a 25% discount. Is there a code for that, Kels? Or it's the URL, isn't it?
Oh, it's the URL.
Right.
Yeah. We did have a second question, or a question come in from Simon too, that if we want to jump in. So Simon's asking, as time moves on, age and maybe wisdom comes to us all, how do we make a transition from a high growth to a lifestyle business?
First of all, if anything, I more often see it the other way around. People start with a lifestyle business and realize that it gets boring, and then they start aiming for higher growth. But the transition is usually a gradual one. So if you want to transition from high growth to lifestyle, you want to change from focusing on revenue growth to increasing profitability, and from focusing on profitability to focusing on cash flow. So that means that instead of investing massive amounts in ads, you're going to scale down your ad spend to slow your user growth, but increase your profitability. You're going to focus on less on introducing new products and more on maximizing the gross margin and maximizing the efficiency in your supply chain to add to your bottom line. You're going to invest more in hiring people who are going to not only do the tasks you tell them to do, but are actually taking ownership of parts of your business. So you're going to spend more on your team, but you buy your time with that in return. And in general, you're going to switch from chasing every new shiny object for growth to focusing on doing less, but doing it more profitable.
All right. Very good. So Rob, how do people get a hold of you?
The best way is either go to our website, financeinsidematters.com, or connect directly with me through connectrob.com.
All right. Very good. Thank you, sir, for being on the episode today. Really appreciate it. Thank you for dropping all the insight. And you're very welcome. We'll have you on discussing some other financial matters in the new year. But thank you once again. Have a great day. And for everybody else, Wednesday, we're going to be joined by Vitaly Kozniak. And he's never been on before, but this guy knows his stuff about Amazon ad strategies. And we're going to be talking about, how to get the most out of every dollar you spend on Amazon ads in 2022. So check that out. And once again, a quick word from our sponsor. Thank you, Sellerize, for sponsoring this episode of Lunch with Norm. Sellerize is your comprehensive solution for your everyday business needs. Everything you need to grow and scale your Amazon business is just one click away. For more information, contact Dima and his team over at Sellerize.com. And remember, Sellerize is with one R. Farrar is with two. Kelsey.
I think you're loving these video ads.
It's something we just thought that it would be, something that we try out. So, yeah, I'm kind of curious. Just leave us if you're part of the community. Let us know at Lunch with Norm in the Facebook group what you thought about the ads that we're doing. Is it better that way, or just the shout outs that we normally read? I know what I think, but I know what Kelsey thinks. But anyways, what do we got on the go, Kels?
All right. So if you have been in the Facebook group, that's Lunch with Norm, Amazon FBA, and eCommerce Collective, you'll probably see a message from Norm saying that we've had a new guide section that we're working on. So we're really trying to keep up with our episodes, our questions, our frequently asked questions, just make it really easy for you to get the answers that you need from Norm and I, and just the community in general. So if you're a newbie and you have a question, we have certain hashtags you can use. If you have a question about the show, there's another kind of hashtag you can use. We're just trying to organize it so it's just as good as it can be. So let us know what you think. It's always changing. We actually have a cool new contest happening. It's going to be like a monthly contest with a $50 Visa gift card, I think. So we'll let you guys know more about that in the future.
A custom
lunch
with Norm Visa card.
So it's pretty cool. There's lots happening there. So I highly recommend you head over to Lunch with Norm, Amazon FBA and eCommerce Collective Facebook group. Also smash these like buttons. Let us know if you enjoyed today's episode. And yeah, I think that's about it. Don't forget to subscribe. We have the Movember fundraiser pinned to the Facebook group and Norm's personal Facebook. So if you want to contribute to men's health and cancer awareness, this is why I'm growing this beautiful stash of mine for the month of November. So if you're listening audio, make sure you check out our video section so you can see it in real life. But
yeah, I don't know if you want to see it. I don't know.
Might scar you, but
all right. Now, I don't know if you hear it, but the power just went off. We're on a backup battery here, but I don't know what just happened. I know it was snowing here, but let's get this. Let's cut it before I lose my internet connection. All right, guys. So thank you for joining us today. I hope you like the new format that we've got going. We've got tons and tons of stuff happening over in our Facebook group that we're going to be bringing on. And I think that's it right for now. Join us every Monday, Wednesday, Friday at noon Eastern Standard Time. And thank you for watching. Thank you for being part of this community. We couldn't do it without you. Enjoy the rest of your day. See you on Friday.
Lunch with Norm.